The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to a beautiful June 5th at the headquarters of Technical Trading and Investing, TFNN.com. I am your humble and lovable and limping host, David White, for the Power Trading Hour. On this day in 1933, 80 years ago, the United States went off the gold standard, a monetary system in which the currency is backed by gold, when Congress enacted a joint resolution nullifying the right of creditors to demand payment in gold. The United States had been on a gold standard since 1879, all except an embargo on gold exports during World War I. Of course, many years later, we got the right, once again, to buy and sell gold. And I guess we can be called gold bugs here at TFNN. And always remember the first gold trade we had out here. It was on it was on Drury. And the thing went from like $2 to $7, and I think the gold fever at TFNN had started. But a long time ago. I think that was before Drury even had a Y at the end of it. But I remember that it went down and didn't do anything for like several years. It was untradeable after that. Always the first shot in a market where we're having a bull run is to advertise it, and I remember Drury as that first big trade that really cemented the idea that gold was going to be a long-term play. And, of course, we got back on many other stocks that did very well. I've started buying, I think, BGO at 29 cents or something. We had a lot of good winners in gold, and of course, as long as they don't tell us we can't buy gold anymore, which I always wonder if they'll ever try that again, but didn't seem to work too well the first time, so maybe they've given it up. So we're going to have a lot of news today, and a lot of it is important. I'm going to try to get through it just as quickly as possible. Unfortunately, the last part, and probably the most important, will come in the last. Because I just got off the phone with the New York Stock Exchange with emails with Bloomberg and Nadex, and we're going to tell you exactly what's going to be changing in the market over the next few weeks and over the summer. And I think everybody that is trading, especially intraday, needs to be very aware of what is changing and why. I think that there's something bigger out here, and it from looking at the filings and how they push this through, it is going to be important. But we'll get to that more probably by the bottom of the hour here. Of course, Ben Bernanke started the massive sell-off, which is continuing as we look at the market here right now. Just wanted to check it. 1613 on the S&P cash. A lot of people that use moving averages, I think that they are self-fulfilling and more like speed bumps than actual rules or laws. But we got down to 1608, which was the 1609 actually. 1608 is the 50-day EMA. 1604 is the SMA, or simple moving average, and I can see enough people have been buying that as we've gone up to be self-fulfilling. I suspect that if we are close enough to that 1608 area, we could blow through it at the end of the day, as volume has not risen to anything that I think is epidemic, so I don't see any kind of capitulation yet. 2.3 billion shares on the S&P cash so far, and of course we got down to 1609.28. And just a few days ago, I couldn't find any of the talking heads short of TFNN here that really thought that there may be some big issues. Of course, many of the people in Wall Street are subject to a Pollyannish view, especially in a bull market. I thought that we'd been in a bubble, and especially no bigger bubble than Japan. But of course, a few weeks ago, we had Bernanke drop the Baby Ruth in the punch bowl, and we've continued on. Of course, most people are thinking Japan is the canary in the coal mine. It was down almost 4% overnight, and again, starting and making people think that there's a fear of a world market crash. Several days after the first downturn in Ben Bernanke, New York Stock Exchange did apply for some rule changes. We're going to talk about that just a little later. In the setting sun, UK's FTSE was down 2%. Germany's DAX was off 1.2%. The CAC from France was off 1.9%. Spain off almost a percent. Portugal off 1%. Italy's MIB was off 1%. Irish overall index was off 1%. And Greece, amazingly enough, was up 0.4%. But a lot of fear. Of course, they closed at 11:30 Eastern and didn't see probably more of our downturn. I suspect that when they open up tomorrow, or actually tonight, it will be problematic. Apple versus Samsung after the bell last night. Basically, the ITC, the International Trade Commission, awarded a win to Samsung. And there's a lot of misinformation flying around. But look at the spin doctors, especially for those that own a lot of shares of Apple. They can't afford to be getting in and out of this thing, and really trying to make sure that it settles down. Of course, it was off about 1% after hours last night, and probably that is about the right amount of money, and we'll get into it in just a second here. But Apple's saying that they can appeal this, and the ITC stuff cannot be appealed to the local judge. You can't just run over to the local federal judge and appeal it. You can, but it has no weight. The ITC can only be appealed by the leader of the company or a country in there. So basically, the only person that can say, not on my watch, is Obama. And there has not been anybody that's done that since. It's really been instituted since, 1974, something like that. And I think that was the first one was actually appealed at the same time, and then later slightly modified. But they changed the rules slightly to make it a little harder for the ITC. I've said since day one that Apple getting involved in these lawsuits, they would rue the day that it started. I think that there were two things that Steve Jobs did that were incredibly stupid. One was getting into a land war in Asia over these patents. The second one we're going to talk about in a second, and that is getting involved in a bunch of shady business. Basically, they have two things that they need to be worried about. Anyway, in ITC patent disputes, the only reversible entity is the president or the leader of the company it happens in. Of course, these are all about FRAND patents. FRAND patents are patents that mean that if you do not have the rights to them, you can't play in that pond. And there is a theory in law that comes from the Godfather. I'll get to it in a second. But basically, FRAND patents are fair, reasonable, and non-discriminatory terms. There's a licensing obligation is required by standard-setting organizations. So what we had was some patents that Samsung had bought up to gird their loins against Apple, and they were pretty good ones in this. And they're not easy or even able to be gotten around by Apple. Now that they've gone to LTE, it is a different issue. Of course, everybody's saying, well, this only affects the units that they already shipped, and Apple appeal this. It's going to be basically now you have Apple, or actually Samsung, saying that you need to give us 2.5% of the selling price of your product at wholesale, and Apple's offering about 1.5%. My guess is that cooler heads will eventually prevail, and all of this will go away. But in the meantime, Apple is over a barrel, and of course, they went to no end to stick their finger in the eye of Samsung. It has cost them dearly, and it continues to cost them dearly. If they are smart, they're going to get out of, again, the land war in Asia, where generally the U.S. does not do well. Anyway, Fran Patents always makes me think of Emilio Barzini in the Godfather movie, where they're all sitting around the meeting table, and he says, "You must let us draw the water from the well. You own all the politicians and the police, and we can't sell our drugs unless you help us, Mr. Godfather, and you must let us draw the water from the well." Well, that kind of principle is in Fran Patents. You must make a deal with these folks. It's not going to be one of these things where they will be able to keep the products out for very long. Eventually they'll be forced. So it's hard to tell who's more or less willing to make a deal out here. Samsung delaying it, trying to score some points to temporarily keep products out of the U.S., and or Apple thinking that they'll get a better deal and a lower percentages as long as they decide to hold out. So kind of interesting battle of half-wits, I suspect, out here. Anyway, what else do we have? Oh, okay, now we want to get to the NYSE. And I want to thank, in the den, I wanted to thank Angie for bringing this up last week. I just saw it as a little blurb, and I was very interested to see why they would come in and do this, because I already knew the backdrop. Somewhere around the second week of August, there is going to be a system called Limit Up, Limit Down, and that is on individual stocks. There's going to be a 10% circuit breaker if they move up or down 10%. Now, that is a 5-minute limit, and then the stock will retrade, and it will retrade, and then eventually it's stopped for the day. I won't get into the more diluted issues in that, but it is called Limit Up, Limit Down. Right now, it is not running in the first 15 minutes of trading, and it also is not running in the last 30 minutes of trading. The NYSE, of course, has got its fingers in pies all over the world, saw the 7.8% down day in Japan and freaked out and raced up to the SEC with an amendment to trading where they could quickly, and I mean quickly, that I think the thing actually only was filed the last week of May, or even maybe 8 days with May left. They got into a frenzy thinking that we could see the same thing here, which is an uncontrollable market started in the first 15 minutes and ending in the last 30. They decided to go back to another program called LRPs. And again, we'll be talking about this when we come back. But you need to know what's going to be changing, because it's going to start tomorrow, and it is going to make a change in the way this market moves. I suspect it's in there for a reason, and that is they're afraid of a huge down days coming in the coming weeks. We'll be back in just a minute.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back to the changes the NYSE at least is putting into the market starting tomorrow morning. And I just got off the phone with Rich Edmanis from the New York Stock Exchange, and this is how it's going to work. Between tomorrow and June 13th, basically 750 of the 2,500 widely traded stocks on the New York Stock Exchange are going to get an LRP. That is going to be, if it moves a certain amount, they're going to go ahead and halt it for 5 minutes, and then, of course, let it run back up. And the idea is they call it liquidity replacement pricing. And that is going to start tomorrow. And, again, 750 through June 13th. What is so amazing is, of course, the SEC is going to go to bell to bell on their plan, the limit up, limit down, somewhere around the 10th to the 14th of August. So why did these guys race down to make a change that's only going to be around for 45 or 60 days? They got actually spooked when Japan started blowing up and we started seeing real movement out here, that the last 30 minutes could be a bloodbath with 200-point moves still exist and will probably exist. The 750 stocks will account for about 80% of all money traded all day long. So when that is all 750 individual stocks are in the circuit breaker stage for LRPs, again, what do we got? 12 days, 13 days. Well, actually 8 days, excuse me. So over the next few days, we are going to have a lot of these stocks, and I would not be surprised with the kind of action we have here is going to be an issue. But I think that NYSE people knew what was coming and what is coming, and they want to head off and want to have an orderly market for the sell-off. For us that are short, probably not a bad thing. It will become more of a frog boiling market. That is the old adage that if you put a frog into boiling water, it will jump right out. But you put the frog in lukewarm water, turn the heat on, and eventually the frog will say, warm's nice warm water. The water's getting a little hot. And then pretty soon you've got a boiled frog. And this is, I think, what is more likely to happen and why they wanted a race to get this thing instituted. We talked to our friend from Nanex a week ago on Friday, and we talked about how a lot of this is untested. I just wanted to remind you also that we've had 2 major IPOs failed because of untested software, and one company went out of business night trading because of it. So we are getting changes, and probably the smart thing that they did was not to do them all in one day. So they'll slowly trot these out between now and the 13th. But they had to race to get something instituted for about 45 to 60 days. Lets you know that they are very concerned that we could have yet another flash crash. The idea here is that we're going to just be going limit down, I suspect, for a while if this market does have a Japan kind of moment. Again, especially with high-frequency trading, as soon as you lose those bids down below, you can get into incredibly fast markets. And at least on the stock, on the actual individual stocks, they're at least trying to put a floor under 80% of the dollars on the New York Stock Exchange. What should make you kind of interested is that, of course, there's nothing like that for the NASDAQ stocks. So we could see, especially when markets and traders get freaked out, when they're stuck in these periods of waiting for the markets to reopen, just be very careful. We could have a market that has unintended consequences. And again, we're still trying to figure out how this is going to work. Our friend from Nanex is actually running new tests with the LRPs back in it from previous data and crashing days and the flash crash to see exactly what would have happened, the what if. But I think I emailed him late yesterday after talking to some of the reporters that had started this article in Bloomberg. And the New York Stock Exchange had been very tight-lipped on it. In fact, there was nothing in their press releases. I had to actually call them. They do have people that answer the phone there, which is kind of nice. Wasn't like I had to leave a message. They answered it right away. But I'd be very interested in the first 15 minutes when this thing rolls over, because the handoff between LRPs and limit up, limit down could cause a big disruption in this market. We'll be back in a minute.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And just to let you know, because I did email back and forth with Eric Hunsetter, our guest, 2 weeks ago on Friday? Is that right? Yeah, 2 weeks ago on Friday. And that was... he is a founder and one of the researchers at Nanex, not to be confused with Nadex, that has and keeps all data, whether or not acted upon it or not, every quote, every change, every actual execution, any market data they save and they can go back and look through later. One of the other things, we had somebody talking on one of the other shows yesterday about high-frequency traders. But on Monday, for those that didn't know, they actually had data released an amazing 15 milliseconds before it was distributed to the rest of the market. And, of course, without our friends at Nanex, nobody would have known about it, and apparently high-frequency traders would have been getting the news earlier than us, on Monday anyway. So he came out fairly quickly and showed to everybody that there was almost $30 million in trades in 15 milliseconds before the news came out. And we found out also that the news services were starting to offer specialized services directly to high-frequency traders. The news is in a format that makes the computers easy to act on it without any human intervention. So it's all kind of put together in little blocks. So that they were just looking for the headline numbers to go ahead and do it. They said, well, it was just a problem with synchronization. That's the old honest mistake. And we know that on the Wall Street, there are no honest mistakes. It was probably paid for, but once you shine the bright light of truth on it, most of these guys have to wither and slink away. Of course, we are swimming with sharks out here. Just always know that these are not Mother Teresa's out here. And the closer you trade to that high-frequency trader, folks, the easier it is to get shaken out of the marketplace. But just to let you know that Eric was instrumental in doing that, and I want to thank him again for being on the show last week. Okay, under the limit up and down, I just wanted to make sure everybody knows how that works. Trades are not allowed to take place more than a specified percentage above or below a stock's recent price average. So there's individual limit up, limit down price ranges for the individual stocks. If no trades occur within a band of more than 15 seconds, a 5-minute halt will ensue. So, of course, we're going to have different rules for the first 15 and last 13 minutes, at least on NYSEs. We'll have none on NASDAQ. I would be very surprised to see if we don't have wild swings between NYSE and NASDAQ over the summer. So just be very aware that we've got a market in transition between rules, all designed with us in mind, that is to have no more flash crashes. But as long as we have people able to quote stuff and have some markets that do not have the rules, be very advised. And, I could see, high-frequency traders, especially with this, try to pull some kind of arbitrage, like slam and close the market on the NYSE while running the NASDAQ. So be very aware in the last 30 minutes of the day, especially. I think probably that's more likely when it's going to happen, and especially on days like now where we're having big moves in the marketplace. Of course, we are at 1609. We're off 22 points almost on the S&P cash. Volume is finally starting to pick up, 2.55 billion shares, not incredibly heavy, but I suspect that we could easily get down to 1575 as my first stopping point before we get a decent bounce out of this marketplace. What else do we have? Is this transition actually designed to cause havoc? As my friend's mom, a big Catholic, always ran around and said, the road to hell is paved with good intentions. So my guess, no. I'm almost certain the New York Stock Exchange saw the movement in the Japanese market and decided that they weren't going to get tarred and feathered. And she says, I know that saying in the den. But she was a good Catholic mother and all that. But she'd always yell at me and my friend when we were 15 and 16. We said, well, we were just trying to help. And that was always the comeback. The road to hell is paved with great intentions or good intentions. So anyway, there was a question if this was intentional. To me, this reeks of desperation that they don't want to be the market that got routed once again, like the flash crash. Unfortunately, the laws of unintended consequences almost always come in there. We looked at software being changed at the last minute before Bats Trading tried to go public. You want to be the guy to explain why you changed the software and didn't test it the day before your company went public? Or the same change on NASDAQ when they decided to shove through the trading on Facebook. Software changes, we've seen many of them cause huge issues, and of course night trading is out of business because of it. They lost all the money that their company had made over a number of years in 22 minutes. And that's just how quick it can go in these markets. You need to be very aware. I'm not trying to run undue alarm out here, but I've been writing my newsletter to be watching out for fast markets. I wouldn't call this a fast market yet. It is orderly. But it continues to be and can be a problem. You can give me a call at 877-927-6648. That's 877-927-6648, and give me that. Okay. I just wanted to let everybody know liquidity replacement points are predetermined price points at which electronic trading briefly converts to auction market trading. Okay. So just there, I don't want to get too much in the weeds in this. But it is available. And that's it. My last slide is starts tomorrow, goes through June 13th, 750 stocks. That'll be 80% of all the money that's traded on the New York Stock Exchange, and not too bad. And, of course, tentatively August 12th, we will have a whole day of limit up, limit down starting that day, and all these LRPs will come off of the market. But I don't like having one set of rules for the New York Stock Exchange, one set of rules for the first 15, the last 30 minutes, one set of rules for the NASDAQ that's not doing this at all. So just be very, I almost think that some people are probably going to think about how they can exploit that over the next 45 or 60 days. And anyway, had a email. Again, you can email me at tfnn.com. And ask. I had somebody that wanted to look at something, and I want to try to remember what it is. AHOV. Like I said, I thought almost all these stocks looked like that they had topped out with a higher. With the hires, and I think we've had a couple of people talk about HOV out here. Came within 3 cents of the high again today, but well, of course, we're reversing on this very heavily. I don't think that we could probably I'm not expecting any kind of tradable low out of this market before maybe August. I think the bounces are going to be weak for a while, and we're going to get back to at least some kind of medium. Again, I can't say it enough. We had only 37% of the S&P 500 companies meeting their revenue numbers. That does not bode well for a market that's going to go much higher. That was from 65% making the revenue numbers the previous quarter. So we've got a lot of them that were making their higher numbers, their earnings per share, based on share buybacks, based on a lot of things, but not based on more business. It was based on less business, and or at least less than the consensus out there for analysts. So be very wary of it. You know, you had a lot of volume. It was all down here today. You got within 3 cents of the high, which is good enough for me. I don't think that anybody could watch this market and think it's going to turn around in a day or two. Just so much volume. When we look at, we're already 16 million shares on HOV today. We can look at some of the other housing stocks today. Not saying that I would be going short these. Let me see, where are my housing stocks? I've got a list. Home builders. There we go. Let's just look at these real quick as we go through, see how these things are working. Armstrong Worldwide, of course, the carpet company. It's been down on fairly strong volume. Not doing too bad today. But again, the volume is still to the downside, still have a low to test. We're continuing down on significant volume today in DR Horton. We already have 7.7 million shares going against an 8.5 million share low, just 70 cents lower. This thing's going after that February 25th low at $21.35. More likely, I suspect this thing's going to find support at the $20 level, and we want to look there. Home Depot, this thing rolled over the top fairly strong. It had gone through a gap up on earnings. It came down on fairly decent volume tomorrow. Again, when these stop out, probably not a bad-looking thing. HOV looks like it's kind of petered out here today. Lumber liquidators, this thing's going back into its gap. It might find support a little faster than some of these others. Probably look at it at 72.50 and see what it's doing there. MDC of course, is MDC Holdings, another one coming back into these gaps. A lot of these had some very high blow-off tops where they opened and ran much higher during the day and reversed. MDC Holdings was one, had a lot of volume on May 22nd, ended up lower on the day than the open. Of course, Buffett's a big company, is a Mohawk Industry. This thing's down here banging against its recent lows. Of course, we've got, an hour and 15 minutes left. But some decent volume in this thing. Again, these are probably going to be the stronger of the stocks in this marketplace. But don't be surprised if these things roll over fairly quickly. Pulte Homes, another one. This is a false breakout. Of course, it never really had the kind of volume you want to see once it goes through the high. What I was keying off of was the January 28th high, $21.97. So what do we want? We wanted 10 million shares or more. You kind of got to it with 13 million shares on the 3rd, but then the volume was pretty much, you got 11 million shares for a doji, almost 12 million shares. You really never had a secondary sign of strength out of this thing. Once it closed below 21.97, this thing really looks like it's going to be headed back down to the $17.46 low of April 18th. Ryland Homes, another one. What do we have out here? This thing's back into the trading room, but finding a little bit of support today. $43 on the January 30th high out here at 2.4 million shares. Another one of these false breakouts. Volume was not all that bad, so I'm not going to be shorting these, at least not yet. Maybe one more run up there. I'd like to have a counter move before I ever thought about shorting these stocks. But volume is strong out here. You need 2.4 million shares at the end of the day, and I think you're probably going to get it in the last 30 minutes. Select Comfort, we saw a couple of these companies do well on earnings, but I have a feeling that's looking in the rearview mirror. Mattress Firm yesterday, what's it, MF? I'll think of it in a second. Did have a nice little bump. I'll try to look up the symbol for that at the end, but a lot of these, of course, Select Comfort, they're still under a lot of pressure for margins. Standard Pacific, of course, the dealer for homes down in the Arizona, Florida area. This thing has been coming off its highs for a while. I've been using this as the first poster child of the stock that failed in the housing market. Volume not all that bad out here, though. And, of course, input costs, we want to look at USG. This thing had been weak for a while, and a very decent sell-off starting from the last May 28th high out here, 4.4 million shares. It's been headed down. Volume is going to get very close. I would not be surprised to see this be tested before the end of the day. The April 18th low out here, $23.54, 2.2 million shares. We already have 1.8 million shares. It's not going to be a stretch to see the possibility of some of these getting blown out by the end of the day. So let's go ahead, and we've got just a little bit. We got somebody just posting a thing in there about the whole LRP thing. But we'll continue to look at this market. I wanted to get back here and test it. 1611.81. But you're down 20 points on the S&P cash. Going to be interesting to see how the end of this day plays out. It's all going to be probably about the last 15 minutes of trading, I suspect, maybe 20. We'll be back in a minute. We'll start looking at some more stocks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Has been nice and brisk at least the last 10, 15 minutes, closing on 2.7 billion shares on the consolidated New York Stock Exchange tape. What do we know? We've got a market that's down, 19 points. I'm wondering if we've got enough bad taste in those buying the dips over the last few days that they won't try once again today. I suspect we'll probably have a lot of those orders right in at that 1604, 1608 area, depending on whether people are using the exponential moving average or simple moving average. Again, I don't put a lot of stock in actually using 50 and 200 days. I know that there are enough people that use it that it becomes almost a self-fulfilling prophecy. You can graph it right there, and you'll see a little spike at 50, and you'll see a little spike at 200. But in the long-term things, those are normally people getting in and out. In a few days, you find out that normally, other than a little bit of change, not a whole lot of indication in the market that those work more than a few days and just put a blip in data when you truly test it. But down 20 points already, I could see us hovering over those levels and probably being enough for support. The question is whether or not in the last 20 minutes people will take those orders out and the market will fall. I suspect if we do blow out the bottom, that's exactly what will happen. The people that are thinking about buying at the 50-day will blink, and that will be pretty much all of that. What do we have here? We've got Victor from New Jersey. How are you doing today, Victor?
Good. How about that MUJ? It's a bond from the state of New Jersey, tax-free. It took a pretty big beating. Do you think it's worth touching it or let it go lower?
I think you need a test of the low again. And I didn't watch it very well, but I had a couple of people. I always use price and volume. And the last major low was at 1506 with 150,000 shares. This last low had 190,000 shares.
Yeah.
I'm going to say that it's got to retest that 1444, at least in this chart. But I'd be staying out of munis right now. I suspect that we're going to see at least a few more of these troubled places like Detroit have popped back up in the coming months. I just can't see getting in front of that train. There are a whole lot of better trades out there, in my opinion. But go ahead.
Don't you think they're just going to keep on? They Washington, they just lower the dollar, they pump it down lower, and then the market goes up. What you have the Fed meet the third week this month again. Don't you think they're just going to play that game again? Lower the dollar. The dollar is exactly where it was 1 year ago.
No, the problem I see overall is just what I said there were earlier, and that is that no matter what everybody wants to say, we had only 37% of the companies in the S&P meet the revenue numbers. Things are not improving; they are slowing down, and that's pretty much it.
We all know that.
Even if the dollar moves, I still think that we're about 1% short of actually things getting better in the GDP. And until that really turns around, I think that we're going to see less taxes in a lot of these areas. And whether New Jersey is great, unfortunately, they throw the baby out with the bathwater, especially in bonds. So I just would be very wary of that right now.
Yeah, because I'm just assuming they have the Federal Reserve. Those guys have money working. Remember, they had the money. Those guys. I think Reagan enacted it to bring up the market whenever it crashes. They just pump it in.
Unfortunately, I just have a feeling that a lot of these things are not going to matter. We're probably going to get into a fast market, and everybody's going to be selling everything. They're going to be selling gold. They're going to be selling bonds. They're going to be getting out of everything. Cash is king.
Yeah,
see you later.
Man.
Thanks.
And don't